Look, lots of traders have a hard time depicting the direction of the market, whether it's short term or long term, okay? Now, yes, it is imperative to always use a top-down approach when you are trading, correct? Okay? When you're looking at the markets to try to figure out, should I take long, should I take shorts? It is imperative to always use that top-down approach. But in this video, I want to show you how I trade, specifically the E-mini S&P 500, okay? Just using a simple strategy. But I want to really kind of zero in and maybe give you some a hint, a tip on something that you can use to kind of help you look at the markets a little bit differently. Maybe you're having a hard time trying to figure out, looking at the candlesticks. Hey, is the market trying to go up? Is it trying to go down? You know, because you can almost eyeball these things by just looking, you know, at your chart. You know, if you've been trading for a long period of time, you can look at the candlesticks here and figure out, you know, what's going on right here. Prices right now is off the 12 range chart is doing what? Making higher highs and higher lows, right? Okay, but on the on a higher time frame chart, the market could be actually pushing to the downside, correct? So this is where you can actually be taking long entries, even though the market maybe, you know, be pushing to the downside. But you always have to keep in the back of your mind that your moves, your trades should be short-lived, because you are fighting against an uphill battle. You're fighting against the higher time frame. Doesn't mean that you can't counter trend and trade, you know, from a very short period of time for a very quick trade in the opposite direction. But this video is not about counter trend trading or trading against the opposite direction. It's really more so to kind of show you how I trade, again, the S&P 500, the E-minis, just using some simple tools that we have right at hand. And one that you can actually use, you know, I'm sure you can probably find it on no matter what platform that you actually trade from or read your charts from, is using a line chart, okay? Lots of times I will use it, you know, I'll maybe sometimes, you know, especially in the past I would, okay? But I'm gonna show you how to use it today. If you have a hard time depicting a price made a new high or a new low. In this case here, we're gonna be looking at price moving to the upside here as it's making higher highs and higher lows. And then I'm gonna walk you through, you know, how I use it in my strategy daily as I trade supply and demand. So I want to switch over. You know, first and foremost, if you guys can read what's going on right here, this is off a 12 range chart, okay? The market is making, again, it's pushing to the upside, all right? Now, maybe if we look at the higher time frame, we're probably going to see what? Well, let's see here. The market is actually moving sideways right now, okay? We do have the market, you know, making highs, higher low, making new highs is pushing higher here, right? And the market is moving sideways now. We have a low here and a high right here, and it's ranging, okay? Off the higher time frame for me, the 60 range chart. Now, what we see here is the market pulling back after making this high right here, okay? So it is, again, moving in a range or moving sideways right now. But on a lower time frame, again, you scale down to the 12 range. What do you see here? The market is, you know, from this standpoint, just looking at this one chart, it looks like we are trending to the upside, okay? But again, like I said, on the higher time frame, it does look like we're kind of in, you know, the market is a little, it's bullish, okay? So we do have more sentiment to the upside, okay? But sometimes you still can take opportunities, like I said, where the market is moving higher to take shorts, or if the market is moving lower to take longs. But the best thing to do, as I always say, is to have double or triple means of confirmation. Always try to trade in the same direction as the higher time frame. For those of you out there that have tons of experience and are able to and understand what I'm talking about counter trend trading, even when the market is moving in the opposite direction, again, short-lived scalps to, you know, that may give you opportunities on great high probability setups. Now, again, this video is not about counter trend trading. I want to show you the line chart and how you can simply use it to gauge if the market is making a new high, if it's breaking structure, you know, and identifying key supply and demand zones. This helps me in my own trading strategy on the daily, okay? Because if you've been following the channel, you know my simple rules. I have it's a three-step strategy, pretty much. It's where I want to see a break of structure, okay? I want to see a supply or demand zone created, all right? and I'm looking for within that at that area of supply or demand, I'm looking to see if there's an imbalance. The third part is I want to see the rejection. Okay, rejection for me is the close of a candle in the opposite direction. Okay, a lot of you guys may be able to be aware of that by looking to see if it's a W that may form or an M structure that may form. You may have been taught that, or whatever the case is, but that does give you means of confirmation as well, because let's say the market pulls back to a demand zone and then you start to see the market push down, and it pushes up, pushes down, but it's not breaking below. All it's doing is kind of creating wicks at the bottom, creating a W structure. That is a form of rejection if the market doesn't want to push any lower. Okay, holding at a key zone, a demand zone. Okay, M structure would be more so if we saw it as a supply zone. But again, let's take a look here. Okay, I'm gonna do a quick rundown. Let's go to our what was I gonna do? Line chart. Okay, sorry about that. Let's move this lower here. Still doing it. Okay, the video is getting in my my view of me selecting the tool I want to use. Okay, here we go. Line and close. Okay, so all right. So what I want to do now is I want to make the width of these lines just a little bit larger. Okay, apply. All right. So now you can see a little better. Okay, so what you see here is the market is moving to the upside. It makes a high here, higher low. We haven't broken this high right here yet, but then it pushes up. All right. Now, with the line and close on the line chart, what you're seeing is the close of candles, okay? Not the wicks of them. So this helps you gauge or be able to visualize, excuse me, what the market is doing without all those crazy wicks you may see. I think a lot of times the wicks is what stands in the way of traders really understanding, is the market truly making a new high or is it making a new low, okay? In this case here, it eliminates the wicks. And then we have a new high here, a pullback, a higher low, a new high, higher low, higher low, higher high, higher low. And, it keeps moving on. Then we get a nice pullback here, okay? Pushes lower here. We're within this leg right here, or this swing to the upside. So we have that low here. We have a high, higher low, boom, break structure right here. So we have a new high up here, okay? Now, what I want to show you, we're going to go ahead and mark off the breaks of structure in a sense, okay? Because that's really important, all right? So let's take a arrow line here, okay? And then, actually, let me see if I can do this right quick. It keeps getting in my way here. This video, there it goes. Okay. All right, the webcam. Okay, so anyways, so what we have here is the market has broke through this area of structure right here. Okay, so say above this area 41.35 right here. It breaks right here. Okay, so it breaks up. It pulls back. Okay, so this is the creation and formation of the new high of higher highs and higher lows to the upside at the breaking structure, and that's key because we need to be able to identify the breaks and structures in the market, because that's the step one to my strategy of how I actually trade. I want to see a break and structure. So we push this up here after breaking this key area structure here. So once we made a new high breaking through structure, now I'm not 100% ready to say I'm going long yet, because what I want to see is, yes, we broke structure here. This could be a pullback, of course, to some key area of demand to go long. But what I want to see is there going to be a continuation of breaks of structure to the upside, all right? So makes a high, higher low, boom, we break structure right here, okay? The top end right here. Got that? So then it breaks structure here, pulls back, okay? And then what does it do? It breaks higher. It pushes higher right here, okay? All right, so we have another break right here, okay? Makes a new high here. But before we actually mark this, once we broke that area of structure right here, let's say 41.43, I want to go ahead and mark the area of demand, because once we break structure either up or down, we're going to have where a demand zone and supply zone is created, okay? So in this case here, we have an area of demand, all right? We want to see price make a new high at the break of structure, pulling back. This is an aggressive area buying to the upside that broke through this area of structure right here. So we want to see price pull back to where? To this area, well, pretty much to the creation of the structure break to the upside right here. And which it does, and we mark an area of demand that actually broke higher to break through that area of structure, okay? Which was this area right here, this area of demand, all right? And that's what we're waiting for. All right, so then, like I said, we push up, leaving behind this area of demand. Look what happens. Price comes right back to the area where price broke structure, and this push to the upside right here. This is aggressive buying. This is what took out this area of structure. So when we pull back to that area that area of structure that was just broken, and we pull back to that key area demand, then we're gonna be looking for something to happen, right? So look what it does. Taps right into it, pushes higher. We get the break right here. Now in this case here, it actually breaks lower. So this would could probably be classified as a reversal, right? So price breaks lower, but then it's just a pretty significant pullback to do what? To push higher. And then it pushes higher, okay? What happens here? We get the break of structure right here, all right? So once it breaks, I didn't create an arrow, so let me take that off there. Let's go back to our arrow. It breaks structure right here, right? Once we get that break right here, look what happens. Well, before we do that, once we break the structure, we're going to mark our what? Our area of demand, okay? Right here, okay? Look at that. See? Why is that an area of demand? Look at the aggressive buying. We're looking for areas where there's significant buying in this case when the market is pushing higher, making higher highs and higher lows, breaking structure. So this would be an area of demand. Could this be down here? Yes, it could be, but we're looking to see, you know, we could mark zones. We could actually mark this right here, okay? But, you know, this is also a zone as well. It breaks structure right here, pulls back, aggressive buying, market. And wait for price to come back to it patiently and see if it's going to react at that zone. In this case here, it does. It does what then? It pushes higher, okay? It pushes higher. All right. All right, so once it pushes higher, all right, we're going to grab our arrow line again, break structure right here. Then we say, okay, we got to mark our demand zone, right? Well, in this case here, the aggressive buying to me comes starting off down here at the bottom right here, okay? In this area or the zone right here. So I could mark that as well. It's going to be a little hard because we already have a zone there, but we'll do it like this, okay? And then break a structure, market pulls back, and we start getting some fall through to the upside. Really, to me, once starts price does this right here, these are just impulse moves to the upside. So not really areas of break of structure to me because I'm looking for the price to kind of pull back and create some area of structure before it breaks higher and breaks through an area of structure, meaning either breaking through a new high or breaking through a low, meaning a prior high or prior low, like right here. Price breaks up, pulls back, boom, breaks that high right there, okay? Price pushes up, pulls back, boom, breaks that high right there, creating a new high. So breaking through areas or breaking through new highs or making new highs, okay? So, or lows, okay? In this case here, after that, it makes a high up here and does what? It starts to push to the downside, okay? Again, we get a significant, basically reversal up here at the tops right here. Price pushes lower just to do what? Create a new low to push higher. So it's just a significant pullback to push higher. In this case here, it breaks structure right here as it moves to the upside. Now we have to identify where the demand is going to be in this case here. So we can mark this area right here as our demand zone. And what does it do? It comes right back to it. This is today, round 2. And I took this trade right here on the pullback to this demand area, okay? This should be an arrow and not a line. We will make this an arrow right now. What did I say? Right here. Okay, breaks that area structure right there to the upside. This will be an area of demand where it blasts, you know, aggressive buying. And that's what we're looking for. We're looking for breaks of structure, but we're looking for key areas or swings that created where there was lots of force to the upside, lots of buying in this case here to the upside that aided in the break of structure, okay? Again, that's an area of demand. Price comes back to it, we look for something to happen. This will be demand here at the bottom here, and this could be demand down here at the bottom as well. So those are areas we wait for price to come back to. And that is all in part of the step-by-step process that I look for to happen. 3 steps, strategy that must unfold. I've got to see a break of structure, okay? I've got to see a key area of whether it's either aggressive buying or selling. In this case here, aggressive buying to the upside or aggressive selling to the downside, but we're talking about demand in this instance here. So, and then the third part is I want to see, well, I have to see that imbalance as well. I want to see an imbalance back at, say, for instance, let's use the first area of demand right here. I want to see the imbalance back at this zone right here. Okay, so price pushes higher, pulls back. We got the demand zone at the breaking structure. If you don't know what an imbalance is, please watch some of the videos. I did a video on it. I think the prior video to this one here, my last or most recent video. So go back and watch that one as well, because the imbalances are very important because they show you areas in the market where the banks, the institutions, the big players, where they are filling orders to either push the market higher or push it lower. They want to buy or sell at certain zones, okay? And you have to be able to, you can see on the chart, just pay attention to what's going on. You can see those supply or demand zones being created, which are the same thing as order blocks. And those are the opportunities at which we, as retail traders, want to trade, okay, in areas like that. Just like here, price pushed up, creating an area of demand here, and an order block right here, price pulls back to it. They're looking to fill orders. But prior to, when they were moving the market higher here, the market was pushing higher here. Look, and the order block was created right there. Orders were filled to push the market higher. All right, it broke structure, pulls back to this key area of demand, and this buying to the upside, all this aggressive buying right here, there are imbalances. We'll go over to the candlestick chart, and you'll see that what I'm talking about, imbalances that needed to be filled at that time. And as price returns back to, or retraces back to this demand zone right here, is filling in those imbalanced areas. And once it fills in those, come back to those areas, okay, it's basically transacting or finishing to process those orders so that the market can continue to what? Push in that same direction upwards, okay? So the market's got to come back. The banks got to fill those orders. And when they come back to fill those orders that are left behind, they're going to push the market, continue pushing the market in that direction up, okay? So we'll go ahead and switch over now, and I'll show you what I'm talking about here. You know, right here, let's say, for instance, this was yesterday, and even this trade I took today, okay? Let's take a look at that. I'm going to switch over to, let me move this down, candlestick chart, okay? Push this back up. Let's change this. Whoops. Come on. We'll just make this one time being, apply. All right, so look, well, market pushes up, makes a high here, higher low, boom, break structure, making a new high now, right here, okay? Look, there was an area of demand right here. There's an area of demand down here at the bottom too, okay? All right, but first and foremost, when price continued pushing the upside, it eventually came back and tested this area here first, right? It hasn't tested this zone yet, but when it did push up and break structure right here, let's move this up, break structure, the top end of this high here, it created these imbalances, meaning as candles were being formed, they didn't come back to the prior candle to basically process or transact orders that are trying to fill orders that were left behind, okay? So it pushed higher, and this is what the bank is doing, the institutions are doing. Institutions are coming back to fill those orders, okay? Aggressive buying took place here that broke through this area structure. When it comes back to that key area of demand, again, demand is aggressive buying to fill those orders. They're going to transact at this area here, and then the market's going to push higher, okay? When the market comes back to transact at areas where there are imbalances in the market, whether it's up or down, in this case here, we're looking where the market's pushing higher, so it pulls back, it's going to process or transact or fill those orders, and then the market's going to push up because those are buy orders to push the market high. All right, so the market, you know, it makes a high here, it pulls back and starts making these higher highs and higher lows, which is more like, this is what I call internal structure to a bigger swing, okay? So you have internal structure, high, higher low, high, higher low, pushes up here, okay? But we don't get the break of structure until price actually closes above right here at 41.58.5, okay? And it takes out this high right here, okay? Pushes up, takes it out. Now, in this case here, we're looking for price to do what? To come back possibly to this zone right here. And it eventually does, okay? After breaking higher, making our new high right here, comes down to this area. But look, it comes to that area and we do not get what I like to call a break in the opposite direction. I mean, a break of a candle in the opposite direction to push the market up, you know, getting that rejection. That will give me the confirmation to go long. It doesn't do it there. It pushes lower. There's a demand zone sitting right here. What does it do when it gets down to this demand zone now, okay? It comes down here, all right? It breaks higher. It's coming up here to do what? To fill in imbalances back to the upside here, okay? And then it pushes up here, fills some imbalances. What does it do then? It comes back and then pushes us a little lower here, right? But it's still, at this area of demand, it comes back and tests that zone again, and then it takes off to the upside and continues taking off to the upside, okay? So This is kind of an area right here where they want to shake you out of the market, especially if you went long right here. They know most traders, a lot of people are going to probably interested in going long because you have you have aggressive buying right here. It is the demand zone. Anybody that trades supply and demand, they know, the market makers know people are putting their orders to go long. So they are going to test you at this area right here. You went long right here, it pushed up, you made some money, and then if you stay in the trade and you put your stop right here at the back end, then it stopped you out. That's why I tend to like to put my stop at the back end of the area of demand or supply. In this case here, it would have been back here, okay? Yes, when you're trading this way off of a slightly higher time frame, even though 12 range chart is not, a really high time frame chart, but still the higher that you move up in time frame to trade from, the larger your stops is going to have to be. I'm going to tell you right now, okay? All right, if you're really trying to just do some quick scalping, you need to really probably scale down to a 4-range chart or lower, or maybe a 1-minute chart if you're trading, time-based charts. But I'm just letting you know, the best thing if you're trading, say for instance, supply and demand or order block trading, you really need to be mindful of where to put your stop at. I mean, this is very conservative to put it back in this area, and you would have been in the green, okay? But you got to understand that they will pull the market back or stop it at any point to run stops and collect money, okay? And that's what it is, to stop traders out. So if you got in right here, let's say for instance the break after it right here, or maybe the close right here at 45, and you picked up maybe 6 points right there, okay? Then the market starts to come back. Maybe you stayed in the trade, okay? Broke the even here, pushed back up to give you a second chance to get out of the trade. And then if you stay in the trade, it stops you out right here. Put your stop at the back end right here below 35. Yes, you are going to have to risk more. That's why people always say, well, I don't have enough to risk or take on the risk like that. Then you may not be, looking at or want to trade from a slightly higher time frame chart. Okay, you may just want to do some quick scalps for maybe 2 points, 3 points here and there, and it still accumulates at the end of the day. So just be mindful of the time or the type of chart you're trading from, the time frame chart. Say for instance, what type of chart it is, and to where you should put your stop at. All right. Again, conservative traders that are really maybe don't have a lot of capital to trade from, you put your stop right here. It stops you out. It stops you out. I mean, I would hope once you got to maybe making 5 or 6 points that you went ahead and took profit. The moment you start to see it pull back, go ahead and take your profit. And again, it gave you a second chance here. But either way, the market continues running to the upside here. Now, here's the trade I took. Remember I said we got a break of structure, to the upside right here. All right, we did. We got the break right here. There was an area of demand right here. The market pulls back to it. I jumped into the trade here, and I was hoping the market to come back up here and even fill in this imbalance right here, but it came right here, and then it shot lower. But I was able to capitalize and still make some profit on that trade there of 5 points. So now we can see what's going on in this area here. Again, that was a demand zone right here as well. Price pull back to it. You can see that green line right there and tap, pulls to it. I think we're like 1 tick away, but I count that kind of thing, guys. If we're just 1 tick from hitting the area demand and supply, I mean, I'm gonna count that, and as long as I get the rejection in most times and take that trade, even at 2 ticks, if we're 2 ticks away from actually filling it tick to tick, because sometimes they try to do that to trick you out. But anyways, the price comes back to this demand zone right here. Look at it's rejecting. For me, I'm an aggressive style trader, so that's a nice bullish candle right here. It comes down. Look what it does. It get the red candle here, right? This last down candle right here. It flips. So this candle, as it was forming right here, this green candle was probably, I'm sure, red at some point, as if it was going to close back down to the downside. But look, it flips. Nice bullish candle. More than likely, once this closes and the next candle starts to form, I'm going long. Okay, where am I going long to try to fill these imbalances back to the upside here. Now we do have this area of resistance from the swing to the downside, but price has got to fill some areas here. And back up to here as well. So more likely it may try to come up here and test 41.64, but it can still bounce right here. We are at a high volume area. It can bounce right here, this area of resistance, fill this. Well, it's already hitting and filling this area of imbalance right here. Okay, in between these last 2 candles to the down, these last candles to the, well, not last candles, but this candle here that broke this candle right here. So you got to push down. Next candle broke. You got a gap right here or imbalance. Price is filling it now. So, that's what it's doing. So this was a rejection at the key area demand to go long. You have to look for those rejections like that. But again, first and foremost, if you're having a hard time, like I said, to really depict, if price is making higher highs or higher lows, and being able to see those breaks of structure and identify those key areas of demand in this case here, then really just go over to your line chart. Let me move this down again. A line chart right here, a line and close, and you'll be able to see, okay, because it takes away the wicks from the bodies, and you can see with the actual where the market closed above or below a prior high or prior low. Okay, so hopefully that kind of helps you out a little bit. But that's really all I want to show you guys in this video here. Kind of how to simplify things to kind of get a more keen eye or a better eye, and being able to picture what's going on if the market is moving higher or lower, and trying to understand, is it breaking through a level? I mean, is it breaking and making a new high? Is it breaking and making a new low? Did we get the break of structure? Those type of things, because that will make up the difference of you making solid trades and not making solid trades. Okay, but again, the biggest thing is always looking for areas of demand and supply. I mean, that is the most important thing, being able to identify those key areas of aggressive selling and buying. And coupled with that, the second most important thing is really going to be the imbalance. Is there an imbalance at that supply zone? Is there an imbalance at that demand zone? So look for those things. Outside of that, guys, and this trade that I took here, right, that was right here, this blue box right here, I posted that over on the Discord. So I did a screenshot of that trade and posted it there as well, so you can see the trade. Again, if you are interested in joining our Discord, then find the link down in the description portion of this video below. And that's all I have for you guys. I appreciate everyone tuning in and watching today's video. If you do not mind, please drop a like on the video by smacking that thumbs up button. Next to it, if you have not subscribed, guys, please click on the subscribe button if you are a new viewer, okay? And you are really trying to grasp and understand supply and demand. I have tons of videos here on this channel where you can go back and watch my live trader sessions. You can go back and watch some of the information or information-based videos where I talk about my strategy and how I trade, and because I break it down. Okay, I give a lot of good information away for free. So hopefully you hit that subscribe button down below. Click the bell next to it. Turn your post notifications on, guys. I'm getting tongue twisted because I'm talking so fast. But turn your post notifications on so you never miss one of the videos here on the channel. That's all I have for you guys. I'll see you in the next one. Take care.